Hello and welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Tim Price. Tim is a co-manager of the VT Price Value Portfolio, a private client fund manager, and also the author of The War on Cash and Investing Through the Looking Glass. Tim, welcome to the Contrarian Capitalist.
Thank you very much, Rob. Thanks for having me.
I thought a great place to start, 'cause this was something I saw on X and it made me laugh, and then realised the severity of the situation. And it was something you posted at the start of May. And this quote is from Marcus Tullius Cicero. And it is, any man can make mistakes, but only an idiot persists in his error. And then underneath that, you've got a wonderful photo of Ed Miliband.
Purely by coincidence.
I,
That
I,
just the Ed
incredible,
Miliband
right?
reference is just what happened to happen on the feed. It's all in the AI algorithm.
I thought that energy is a hot topic at the moment, and I appreciate there's going to be people listening to this podcast that might not know who Ed Miliband is or what's going on energy wise in the UK. So I thought maybe we could start there today.
Sure. So for people who don't know, Ed Miliband is basically the court jester. He's basically the village idiot that somehow has been appointed to the cabinet of Keith Starmer, our local prime minister, and he's basically got the bit between his teeth to bring the UK to the pinnacle of insolvency and bankruptcy through commitment to net zero more aggressively than anybody else on this planet.
And in terms of things that he's been doing or things that he's trying to push through. I just want to try and get for people that are not necessarily European based, the insanity of what's been going on back at home, as
So,
I call it.
so the
What's
UK
it?
isn't alone in this. So Germany, I think, is probably taking the lead, and Germany's probably had a more fiercely developed green, parasitical political, uh, you know, polity. But basically, yeah, we're following in their footsteps. So what they seem to be wanting to do is, well, it's under the guise of net zero and climate change, but effectively we're talking about global communism. So they want to take away all of everybody else's rights to things like life, liberty, and the pursuit of happiness and energy independence and energy infrastructure, and replace it with things like 20-minute cities and a commitment to net zero. And none of us will have cars, none of us will be allowed to travel on airplanes, all of this nonsense, and none of it stacks up. I don't think there's any logic to any of it. But it's something that effectively was ushered in not just through the more recently appointed Labour government, but before them the so-called Conservative government that they replaced. And the UK, there's a phrase that I'm sure you've used and seen used, which is the uniparty. So up until the Trump administration 2.0 of the last 100 and so days, the Uniparty was alive and well pretty much everywhere in the West. In other words, it didn't really matter which party you voted for. Here in the UK, we had a notionally conservative, supposedly right-wing government, and then that's been replaced by a supposedly left-wing Labour government under Keir Starmer. But the reality is these phrases don't really mean anything anymore. Firstly, because there's no essential difference between either of them, so it didn't really matter who you voted for. You got the Uniparty anyway. And secondly, the terms right wing and left wing no longer have any meaning, because I'd say the stuff that really matters to everybody now, everybody on the planet, is basically you are either for the big state, the big government, one world government, you might say, globalism, or you're for the individual rights of the individual. And I would call myself a libertarian and therefore in the latter camp. But that's really what it boils down to. You either believe in the power of the big state and central planning, which has been thoroughly discredited over the last century, but is still mysteriously popular, or you believe in the rights of the individual over the state. And that's the sort of battle royale that's being fought literally every day now in the markets and everywhere else.
Yeah, there's certainly a lot going on, and I've always found it. I don't want to use the word funny because I don't want to belittle it, but always found it confusing that when it came down to energy policy, that people or a lot of people couldn't seem to put two and two together. So, we've got all this, I don't know, solar and wind turbines, etc. And then your electricity bill comes through, now it's gone up 15%, and people not really figuring out that actually we need, if you're going to do it and you're going to do it properly, you need a very good set of baseload energy first, which is going to be, could be coal, oil, gas, or nuclear, uranium, thorium, those sorts of things. I find that befuddling that many people just don't seem to quite put two and two together when it comes down to that at the moment. I don't know if you've got any thoughts on that at all.
I think, I mean, this goes back a while. I think for me, the process of what I would call, say, personal enlightenment, came around the time of Brexit. So the UK voted to leave the European Union in 2016, and it was quite clear that all of the establishment, all of the blob, the big state, was fiercely opposed to that, and has done everything in its power to try and stifle that move, of sort of UK independence from the European Union. And I said the rot set in because it became clear that, as we've sort of just briefly touched on, the big state is smothering everything. And I noticed that the BBC, our national broadcast, state broadcast, the British Broadcasting Corporation, was also fiercely opposed to the sort of the Brexit vote and everything else that came with it. And happily for me, fairly soon after that, I lost my Virgin Media signal, my cable signal. So it completely disintegrated. And as anyone that's dealt with Virgin may know, it's impossible to speak to a human being by way of customer support. So after about 6 months of increasingly frantic attempts to get the thing back online, I just sort of wrote it off. So I've been living effectively off the sort of the conventional media grid now for about a decade or so, and it takes a bit of time to get used to it, but it's lovely once you're really in, because when you free yourself from the shackles of the BBC and the ITV and Sky News and all these other legacy media interests, you start to see a completely different world. So there's the world that the people who watch the BBC believe in, and then there's the world as perhaps actually is, which is maybe somewhat closer to reality. And if you speak to people who exclusively take their media diet, say from the BBC, then after a while you realize it becomes impossible to speak to them, because they have a completely polarized view on just about everything. They believe in climate change. They believe there was a legitimate pandemic in 2020. They believe that vaccines work. They believe that the state has your best interests at heart. Whereas if you've had the other experience and you break free of that, you start to realize that the fix is in, and you distrust everything, and you should distrust everything.
Yeah, it's definitely good fun being on the latter side of that. You get to go down some really funky rabbit holes, and I think
I mean,
that
I'm not sure it's for everyone, because, as you mentioned, rabbit holes, and people who firmly go in that direction. Once you've been down to the towards the depths of the rabbit hole, you can't come back up again. It's completely life changing. So there's a book that you may have come across called 180 Degrees, notionally by the full title is 180 Degrees: Unlearn the Lies You've Been Taught to Believe, by a gentleman notionally by the name of Fergus O'Connor Greenwood, but that's a pseudonym, so I don't know what the real author's name is. But Fergus O'Connor Greenwood is the attributed author. And I came across this, I think, via the Richard Vobes podcast several years ago, about three years ago or so. And I hopped onto archive.org, because it was still available then, and binge read the whole thing as a PDF over a weekend, and then bought the physical copy. But 180 Degrees is pure rabbit hole, is pure rabbit hole experience. And I'd recommend it to everybody, with the caveat that for some people it's going to be a real shocker. So I don't know if you've read it or not, but it basically touches on pretty much every major topic of, let's say, now public debate. And it's completely life altering if you sort of accept the general thesis, which is they've been lying to us pretty much forever about pretty much everything.
yeah, it's not a book that I've personally read, but it's in my basket on Amazon to get sorted. And yeah, that's a good point well made. It is not for everyone, but once if you do go down there, it's interesting is probably the word I would use to describe it. Just going back to globalism and the blob and so forth, we've seen. I know speaking to friends in Canada and both Australia, they're tearing their hair out at what we've seen there because it doesn't look like good news for them either. But this is all just part of the same playbook, isn't it?
It seems to be so. I like to think that the Trump 2.0 will, let's say, start to move the world in the direction of accountability for what I would humbly submit have been crimes committed against humanity for the last at least 5 years, and going probably way back before then. So Trump, it clearly, having learnt a little from his first incarnation as president, is now acting as a sort of wrecking ball par excellence in his second time around, and basically all bets are off, and that's somewhat unsettling for people who believe in continuity and conservatism. But for those of us that do want accountability for crimes committed, it's probably the best thing we've got going for us at the moment, along with people like Javier Milei and maybe Giorgia Meloni in Italy. So there is, I like to think it's not just hopium that I'm sniffing, that there is genuinely some hope for accountability and for, say, moving the pendulum in the right direction after years of woke net zero nonsense.
Well, that brings me on to a really good article that you put on to Substack recently. That's called Preparing for the Turning Point. Obviously, there's a lot going on, as you've just alluded to, across the globe. It could be a new monetary system coming in as well. So, this podcast is all about, preparing people, thinking outside the box, etc. So, preparing for the turning point. Go into that in as much depth as you can, please, Tim.
Sure. So my background is I started out in the city by accident as a bond salesman in the early 90s. So I read English at university and intended to go into journalism or advertising or some form of media. Happily for me, that never happened, because I think I would have been thoroughly bored and disenchanted. And obviously, can see that the conventional media and legacy media are collapsing before our eyes. So I'm quite glad that didn't happen. But I wasn't a natural sort of city person. But the good thing about the bond market, and I think you've written on the bond market quite recently on Substack yourself as a sort of intro to the topic. But the good thing about the bond market is that if you haven't, like me, if you haven't had any formal economic training, working in the bond market it fills in a lot of the gaps. So you've got, let's be overly simplistic. You can divvy up the world between stocks and bonds. There's clearly other things you can invest in, like property, but let's put that to one side. So if you divvy the world up between stocks and bonds, there's the equity world, which is, I would rather cynically say, is full of basically chances telling narratives and stories to each other, and then furious movements up and down, and it seems like a bit of a casino, and to some extent it is. And then you've got the bond market, and the bond market, by comparison, is an oasis of sort of calm, rational, mathematical logic. So the bond market, which is ultimately the world of debt, government debt primarily, but also corporate debt, and bonds are ultimately just IOU. So they're just basically, they're a form of borrowing. And if you issue the bonds, your creditors own basically, if you don't keep paying the interest on your bonds, then ultimately they can take your company away from you. So it's a big deal that they get paid. So an act of default is a disaster. Anyhow, so the bond market is operated. What influences the price of bonds? A bond is simply typically a fixed stream of income payments and then a maturity amount on redemption. But it's a loan. So what impacts on the price of bonds? Well, GDP growth, for example. So expectations of GDP growth affect bonds. Real inflation, or the real inflation figure, in as much as there is one, and expectations about inflation also impact the bond prices. Expectations about currency strength and or weakness. So things like inflation, growth, the economic growth rate, and also the credit worthiness of the borrower. So the ability of the borrower to make good on their payments. These are all critical things, and they're genuinely sort of important at a macro level. So if you have some experience in the bond market, which is ultimately not necessarily terribly exciting, but I think it is now, because we'll continue this thread. But if you follow the bond market, the bond market dwarfs the stock market, not at least by capitalization value. So although it's not typically reported as well or as much by legacy media, it's actually a bigger deal. So developments in bonds are a big deal. And the reason I start with the bond market is because I think what we're living through, and it's what I was writing about in that essay you cited, preparing for the turning point. I think we have to be realistic in that the world, the Western world in particular, but the whole world generally, is drowning in debt. The US national debt stands at something like 36, $37 trillion with a T. It'll never realistically be paid back. So if you accept the argument that we're drowning in debt and that debt is clogging up the arteries of world finance, then the question is, how does that predicament get resolved? One way is that the economies of the West engineer enough economic growth to keep the debt serviced. Good luck with that one. The second option is that you default on the debt. They won't call it default, they'll call it a restructuring or something similar. But basically, that's an active default. And in a credit based system, that's Armageddon. So let's park that one as option number two. So, what do we think is most likely to happen? I.e., what's in box number three that has always been the tried and tested resort of all heavily bankrupt, insolvent governments throughout all recorded history? And the answer is you inflate it away. So the current monetary system in the world, as is, and it isn't really a system; it's just a sort of ramshackle, just like Jenga pile of chaos that's just somehow managed to survive for the last 50 years. The monetary system we currently have basically was initiated in the early 70s in 71 when President Nixon took the dollar off gold. And what that meant was that he severed the link between the US dollar and the gold that notionally backs it. So at a stroke, every currency in the world went off gold, and we had a purely fiat-based currency system. I submit as a thesis that that system is on its last legs. The bond markets of the world are now experiencing extreme stress. Bond yields, which move inverse to prices, bond yields are rising. And that was not the intention for the Trump tariffs. So that's been, I think, a bit of a shock to the Scott Bessent faction, the new Treasury Secretary. And when bond yields are rising, and I would argue that bond yields hit a secular low during the time of COVID around 2019, 2020, and they've been reversing higher ever since. There will come a point at which the bond market says we don't want to play this game anymore. And I think we're very nearly there. So everything that we've experienced over the last few weeks and months I think is tantamount to giving confirmation that we are living literally through the last days of the monetary system as we knew it, and it will be replaced in some form. We don't yet know what it might be. The blob would clearly like it to be CBDC, central bank digital
Mhm.
currency, but whatever it is, it's going to be different from the current system. So, I don't think this is necessarily a contrarian perspective, but certainly we, as a business and as an individual, I focus on real assets over paper ones. And I think if you're caught on the wrong side of this reset, as and when it happens, i.e., you're exposed entirely to paper assets, you run the risk of capital catastrophe.
In terms of the Federal Reserve, because I know there's a lot of talk. I know there's a lot of talk about are they going to cut in May or they're going to cut in June. Would you agree that there's definitely rate cuts coming, and then when they come, that is pretty much likely going to be the final, death knell, so to speak, of the current system as we know it.
Possibly. I mean, we don't tend to focus on, like, say, short-term rate movements because it's it's basically irrelevant. It's just like rearranging the deck chairs on the Titanic. There's a quote I want to share from a American gentleman called Kevin Warsh, who was a member of the Fed Board of Governors for quite some while ago, over a dozen years ago. Um, and I just want to give you this. The Fed has assumed a more expansive role inside our government on all matters of economic policy and moved into matters of statecraft and soulcraft too. In my view, forays far afield for all seasons and all reasons have led to systematic errors in the conduct of macroeconomic policy. The Fed has acted more as a general purpose agency of government than a narrow central bank. And to make the point more specifically, I'll quote from a guy called Lawrence Leopard. I'm kind of at a loss for how to think of a scenario where the government doesn't print a lot of money. I just don't see it. So effectively, what I'm saying is, whatever happens, and whatever the direction of short-term rates, they're going to have to start QE5. I think it's going to be by the next time. We're going to have once again monster stimulus, and that could be the straw that breaks the camel's back. So we've had various iterations of QE, quantitative easing, the purchasing of government bonds by basically central banks. And this game can't go on much longer because I think what the bond market is signaling is that the bond market is now revolted at the idea of basically just printing currency to destruction. If you look at the purchasing power of any main currency, and we'll start with the dollar, the US Federal Reserve was established in 1913. Since then, the purchasing power of the US dollar has fallen by about 98%. In other words, one of the central goals of the Fed was inflationary stability, and it's singularly failed to deliver that in terms of purchasing power of currency. And I don't believe in central banking, full stop. So if you were to ask me if I were a central bank governor, what would I do? Then I think my answer would be the first thing I'd do would be immediately resign, and then abolish the organization itself.
That's understandable. I know you're not the only person that's said such things, if I get my words out properly,
I think
as
I think
well.
people fail to appreciate just how hostile central banks are to everybody's interests, because the story behind the foundation of the Federal Reserve is extremely interesting. There's a book called "The Creature from Jekyll Island" by Edward
Hmm.
Griffin. I don't know if you've read it,
Hmm.
and it gives you the origin story of the Fed. And if you ask people, for example, what is the Federal Reserve, they say, well, it's the central bank of the United States. It's the government central bank, which is not the case. If you read the book, what it confirms is that the Federal Reserve is basically a private banking cartel. End of story. So the role of the Fed realistically is simply to bail out the banks every time they get into trouble, which happens every 5 to 10 years. So we had, the global financial crisis of 2007-8, and prior to that we had the dot-com bust, and then subsequent to that we've had credit problems in the eurozone, and then we've then had COVID, and then extraordinary money printing. And every time the Fed steps in and bails people out, ordinary people suffer. So ordinary people had to pay trillions to bail out the banks in 07, 08, and they got even more stuff during the COVID money printing. And every time you get money, fiat money being created out of nothing, that's inherently inflationary, and it destroys people's savings. So there's a reason why I'm so hostile to central banks, is that a lot of people don't understand what's going on. They don't realize they're being completely robbed by the system, and that system is designed to effectively bail out the elite at the expense of the 99%.
I started to figure that out about 4 or 5 years ago. Again,
It's quite a
during all
shock. It's
the
quite a shock when that penny drops, isn't it?
It really is, yeah. During all the time off, I'll use that term loosely. In 2020, I started to read and have a look round and go down some rabbit holes, so to speak. And then you start to realise what's going on. And as you said, it does leave a bit of a shock to the system. But I always try and look at the optimistic side, or the what can people do side. I mean, that's the purpose of the writings. Putting things in layman terms, like the bond market, as you alluded to an article I done the other day. But also, there are plenty. Although it sounds doom and gloom, we're not trying to be doom and gloom. This is just realism. This is what's going on. So let's move on to the more optimistic side of what people can do to protect themselves. What is the playbook for moving forwards, Tim, in your opinion?
So I think history is basically repeating itself. So to go back again to the 70s, 71, Nixon takes the dollar off gold. The 1970s turned out to be a high inflationary decade. So you had OPEC, oil shocks, supply shocks, war in the Middle East, and the net impact of that. Well, it wasn't even inflation; it was stagflation for most of the West. So stagflation being a combination of stickily high inflation and yet no economic growth either. So it's the worst of all possible worlds. And in a stagflationary decade, i.e., the 70s, stocks were a disaster, bonds were a disaster. There was only one asset class that did well in the 70s, and that was commodities, so gold and commodities. And I think history is repeating itself already. So if you look at the performance of gold, gold's been a great performer, really going back at least to 2000. And it's I think it's actually outperformed the S&P 500 on a total return basis since 2000. So gold's really surprised everybody, or nearly everybody. So I think the playbook is, if you expect more money printing, if you expect more QE, if you expect particularly some kind of monetary reset, then probably the safest asset to own in that environment is, let's say, real assets over paper ones. That is to say, productive economic interests over simply fiat money that the state can print ex nihilo from out of nowhere, to its heart's content. And to give you a ballpark figure on the potential returns, the price of gold and silver went up by something like 23 times, 23x during the 1970s. And I think that the problem is worse today, because I think we're now facing a complete system reset, because the debt is too high and it won't be paid back. And people are increasingly, getting wise to that. So whatever happens to gold, I think the gold price will go further in currency terms, in money terms. But we like a combination of basically precious metals, the likes of gold and silver, and also listed interests, equity interests of fairly priced mining companies. Because if we're right about the direction of travel for the metals prices themselves, then there'll potentially be some extraordinary, maybe generational wealth creation opportunities in the mining space. And at the moment, nobody's aboard this train, so there's still plenty of time to wait on the platform.
Yeah, I was just looking at my notes because I did have that written down. Why aren't more? Why do you think? Well, I think you've probably alluded to it earlier on with a lot of people watching things like the BBC, but I'll ask the question anyway, and that is, why do you think many people aren't actually aware of what's going on, especially with like Western, retail and gold, for example. A lot of people just are completely oblivious to what it is and what's going on with it. Do you put that down to what we discussed at the start of the podcast?
I think there's probably a variety of factors. I think, firstly, I wouldn't trust the legacy media to, boil a kettle. So trying to get sort of informed financial advice and commentary from these guys is probably not the go-to power move here. Um, but wider than that, I think there's also a whole. I think people tend to, institutional investors, professional investors tend to suffer from what's sometimes called recency bias. So people tend to migrate to what's worked. And if we go back to say over the last decade or 15 years or so, it's been quite straightforward. If we roll back the clock to go back to '07, '08, and more particularly early '09, the question you only had to answer one question or maybe two questions. The first one was which market do you want to invest in, and the answer we now know was the US. And then within that, which sectors do you want to invest in or sector? And the answer is tech, big tech. So the so-called Magnificent Seven type stocks, the likes of Nvidia and Microsoft, and the Meta and all these kind of things. That was the one or two decision that you had to make quite straightforwardly. And the corollary to that is that you avoid like the plague all things that haven't really worked. And for most of the 2000 teens, commodity markets were hugely out of favor and mining companies were hugely out of favor. And so in private client circles, what's called the 60/40 portfolios held sway. That is to say, anybody getting advice from a financial advisor will typically have received the advice, well, you put 60% of your assets into the stock market on an indexed basis. So in other words, on a benchmark market index, market capitalization weighted basis. So you own basically the US more than anything else because the US accounts for about 70% of the entire world now, which is probably in itself a danger sign. And then the 40% you put into the bond market. And what we saw briefly, but I think we'll see it again, what we saw briefly during the early phase of the Trump tariff chaos was both the 60% was going down and the 40% was also going down, which isn't supposed to happen. So a number of people have coined this phrase, the great rotation. And I think that's what we're right at the start of. I think we're right at the start of a great monetary systemic rotation whereby over time money is going to depart from the likes of the big tech companies and it's going to go, I think, obviously I'm talking my book here, but I think realistically it's got a chance of migrating towards things like mining companies because realistically nobody owns them. They're extremely underowned. There's not been sufficient infrastructure spend in the entire commodities space or the energy space or the infrastructure space. If we take silver, for the last 5 years, the market's been in deficit. That is to say, the world is consuming more silver than it's been able to create by dragging it out of the ground. That's completely untenable because whether or not you believe in the green dream or the sort of the net zero dream or net zero nightmare, then the simple fact is that silver, being the most conductive metal, is one of the most essential things on the planet. And we couldn't have this conversation without silver because it's conductive and it's part of every bit of sort of basic digital bit of gear. And it's also a core component of electric vehicles and solar photovoltaic cells, and wind turbines, et cetera, et cetera, et cetera. So however you look at it, things are going to have to change because there's been insufficient spending on energy and resource infrastructure for decades. And at some point, the pipe is going to be paid. So which brings us back, funnily enough, sort of full circle to the energy conversation all over again. But either way, to sum up, if someone were to burst into this chat and put a gun to either of our heads, hopefully yours, not mine, and say, what you're only allowed one thing, that thing for me would be real assets. Whichever way you slice it, and obviously we'd own them in a diversified way, but we'd own part bullion, part mining companies, and absolutely nothing to do with the bond market. Thank you very much.
Agreed, 100%. It'd be the physical assets. Yeah, I know that my personal background is in the property industry anyway, so I'm okay with that. In
I mean,
terms of
bricks and mortar clearly are real assets. The only issue I think we'd have there, and we're not property guys, so I'm not on home turf,
mm,
so to speak, but they are interest rate sensitive. So if you believe that the interest rate cycle has turned, and that over, let's say, the next 5 to 10 years, rates are more likely to be higher than lower, then that's probably not the best backdrop for property as an asset class. But of course, property isn't a fungible asset class the way gold is. So, you know, the most important characteristic of any investment you make is the starting price you pay when you buy it. So even a
mm.
lousy property can be a good investment if you buy it cheaply enough.
Exactly. You make your money when you buy in that industry. Property aside, yes, gold, silver, mining companies. Tim, I know that different people have different thoughts on, for example, platinum, and I've written about platinum as well. And some people like it. They look at the platinum to gold ratio. Do you have any thoughts on platinum itself, or is that just one of those? It's a physical asset. It could be useful in this basket moving forward.
Everything's useful. I mean, again, if you go back to the 70s, I think you'll find that gold was probably the first thing to move, and then it ended up dragging the entire commodities sector with it over time. So that'll probably recur this time round. So we haven't got too much by way of platinum group assets, but that's probably going to change by dint of us owning more of them over time. For us, I mean, we're value managers, so this, like you say, it's a question of what the value is when you buy. You make your money when you buy. So at the moment, for us, the lion's share of what we think are really compelling opportunities are in the gold and silver space, particularly silver, because we think that the silver price is so extraordinarily undervalued compared even to gold. And we think gold is certainly not expensive. It's very difficult for people to get a handle on this stuff because how do you price an asset that doesn't generate anything? You can price a bond relative to other bonds because you can compare what it yields and how much it returns and so on and so forth. What its credit quality is, or hopefully you've got an idea of what its credit quality is. It's more difficult to pin down things like gold and silver, except on a ratio basis against other things. So the gold silver ratio, for example, now stands at around 100 times. You can buy 100 ounces of silver for an ounce of gold, which is extraordinary. Very rarely have we seen that ratio side of kilter. So that suggests that the silver opportunity is really, really immense. But you can also price gold relative, say, to the stock market. So on a relative basis, say to the S&P 500, gold also looks extremely cheap. And mining stocks look cheap relative to that ratio too. So there's the potential for all kinds of little mechanisms to suddenly click into gear. And again, I'm sort of talking our book because this is what we own over, let's say, paper assets. But I think it is possible to underappreciate just how much money can potentially be made, certainly in money terms, by having real assets or by being overweight real assets versus paper ones in the years to come.
Yeah, that brings me to a brief exchange I had with someone online a few weeks ago because I'd written about gold, and they said, well, well, it costs so much more to buy X, Y, and Z now. I said, yes, that's true in fiat currency terms, but if it's the old classic example, if you could take a 1 ounce gold coin, go and buy a decent suit back in the 1920s, for example, you
Ancient
know,
Rome, it's held its
uh,
value since the days of ancient Rome.
that exactly the point that in terms of gold terms, in actual money terms, it's done exactly what it should do, which is one of the qualities it has, preserving wealth, for example. Uh, just briefly going on to mining stocks. Obviously, I appreciate you look at a lot of value with regards to them. I know some people get a bit not tetchy, but a bit a lack of understanding. All I would say on mining stocks would be if you study everything we've discussed and then you have a belief that gold and silver are going to go much higher, then the knock-on effect for the mining companies is, I think, is going to be absolutely extraordinary. It doesn't mean that all mining companies are going to go to the moon, but
Sure.
if you believe that the prices are going to go much higher for gold and silver, or currencies are going to continue to get devalued and so forth, chances are the mining companies are going to do very well as well.
No, we'd absolutely agree with that. And I'd go back to this point. I think people just fundamentally don't get it because, to be fair to people, gold hasn't really been money as we would understand it for basically everyone's lifetime. But so we go back to that sort of key moment in 71 when gold effectively reasserted itself as an asset of choice and then outperformed everything else for the next decade. Yeah, I've had the privilege of working with some very intelligent people, far brighter than I am, and one of them, at a Swiss-based company, said 20 years ago they made the following statement. They said, "Gold is not even I'm quoting him verbatim now. Gold is not even an investment. It is a conscious decision to refrain from investing until the return of an honest monetary system makes a calculation of relative asset prices possible." And it sounds a bit sort of dense and heavy and a bit labored, heavy, long-winded, but there's a lot of truth to that, which is basically, like you say, gold is just gold. It's not doing anything special. It's what people are missing is that it's the other side of that. It's the currency side that's being continually devalued by government and central bank activity. So gold itself is nothing more nor less than a good, in fact, not good, but probably the best store of value that humanity has ever created. Whether Bitcoin over time could could replace it, I'm not convinced, but I keep an open mind. But gold has proven itself a store of value for 5,000 years. So try and beat that with crypto, which only been around for a decade.
Yes, it's definitely held the test of time, to say the least. Tim, I know that at the time of recording, you are offering at pricevaluepartners.com, you're offering free portfolio reviews, I believe. So if you could just explain a little bit more about that and also how people might be able to get in touch and find you on social media platforms.
Sure, yeah. So, like I say, for anyone that's interested, just get in touch with us via our website, pricevaluepartners.com. And if you'd like to drop us a line and we can maybe have a chat, start with a chat and then take a dialogue forward if people want to sort of talk about what they own and whether they should conceivably replace certain parts of that portfolio or look to replace parts of it, or just maybe there's no need to take action at all. But we're just up for a chat and we're happy to speak to people on that basis.
Fantastic. And in terms of contacting or finding yourself on other social media platforms, I've got on X, it's Tim Price 1969, and then on Substack, timprice.substack.com, and then the website pricevaluepartners.com. As
Yeah,
usual,
that's fine.
I'll put links to all of them into the show notes that come with the podcast and video as well. Tim, I always like to ask, is there anything we haven't discussed already, anything or any final words, anything else you want to add before we finish off?
So I'll try and be optimistic. If you're going to panic, panic early. Now
Perfect
is the
words.
time to panic.
All right, Tim, no, thank you very much. I really appreciate all of that. I urge people to obviously go and find yourselves and take advantage, if you want to take advantage of that free portfolio review as well. Tim, well, I look forward to catching up, hopefully at the back end of 2025. And thank you again for your time.
Pleasure, Rob. Thanks very much for having me.